the really high net worth. But you know, nowadays we see more and more people enter this market because there are needs. Okay, so the wealth has increased. Distribution wealth has also balanced up. So we see a lot more coming in, not just for those really filthy rich, right? So typically these are the, on my right, so these are the structure of a family office. Involves a trust, the family members under a trust. Then you have a holding company, and the family office is where the fund manager sits and do the investments. Okay. So, okay, this has just been updated probably since I think in April. Yeah, it's been updated in April. So nothing much changes except for the business spending and the asset under management. So it increased the spending cap, and of course the asset under management requirement, right? So the rest of it are quite similar. And okay, these are the service that we do for family office. Okay, so I'm not going to share in detail. So, okay, quickly on work passes. Okay, this has been updated just recently. So the minimum criteria to get an employment pass is 5,000 a month. I think it's up from 4,005. And semi-skilled worker up from 2,005 to 3,000, right? So nothing changed for this. Trainees, students, yes, family members. Yep, nothing changed. And okay, this is something very new. I think just probably 3 days ago, it was announced in the parliament, right? So this is called a one pass. It's given to individual with 30,000 a month salary. But of course, there are a lot more criteria to meet. Not just that. So something like you must be working in a company with high market cap of, I couldn't remember the amount, I think 500 million, something like that, with revenue criteria, things like that. So this pass is an attached pass. So allow you, with this pass, you are allowed to come into Singapore to get a resident. That means you can stay and work in Singapore. Okay, so this is not going to be effective until January 2023. So they will publish more details later. Okay, a little bit about where we are. Just now, Derren was saying that we are in the 14 countries. So this here are where we are. And okay, this is a snapshot of our service. And okay, that's it from me.
Okay, wonderful. Thank you for that pretty comprehensive overview. So let's get into the fun part now, Q&A. The first question was about CPF. Can you, because whether it be a Singaporean citizen who may have US residence, aka a green card, or who may be up for an assignment in the US, or an American who has moved to Singapore and may take a PR, right? So under certain circumstances, you may be exposed to both jurisdictions, and the treatment of CPF becomes a consideration. But could you provide like an overview what CPF is and basically how it's funded and how it's treated from a Singapore tax perspective?
Okay, CPF is a defined scheme in pension scheme in Singapore. So essentially, all employers have to contribute. So do the employees, right? So it works similarly in certain countries like Malaysia. So in terms of tax-wise, for corporate, they get tax deduction for whatever contribution they made to the employees. And obviously the individuals get a tax deduction at the individual tax level for the contribution they made. Yeah, so it's a pension that for PR and above, PR and citizen, right? In the past, many years ago, I couldn't remember. I think in Singapore, during the industrialization, I think they do give CPF for non-Singaporean, non-PR, but no longer now. Yeah, no longer. Yes.
Yeah, thanks for that. Yeah, when I arrived in Singapore 9 years ago, and I remember when I started working in practice in Singapore, some of the long-term US citizens working in Singapore did at some point in time have CPF. So that's a point. So we get this question all the time, it's particularly from Singaporeans who may be moving to the US or from US persons in Singapore, whether you be a green card holder or citizen who may be considering PR application to Singapore, or your PR might just be about to be approved, which may be the case of this person who sent this question through, right? So, as Boon Yip says, it will reduce your taxable income from a Singapore perspective, but not from a US perspective. It does not. So by contributing to CPF from a US tax perspective, unfortunately cannot. It doesn't reduce your taxable income. In addition, the employer contribution to your CPF may be taxable as a benefit to you. So it may increase your US tax liability. And at the end of each year, you log into your CPF account and you get that statement because it works on a calendar year like the US. If you have interest, any return on the CPF investment, so the interest becomes taxable to you on your Schedule B. The CPF also would appear on your FBARs, so FinCEN 114, which will be your foreign bank account report. We need to include the CPF there as well. And if your combined financial assets exceed certain thresholds, it may also be on the FATCA form or the Form 8938, which forms part of your US tax returns. So the CPF is very important if it is as a US person and you're considering to become, it presents itself as a slightly additional compliance burden from a US perspective. But of course, the returns on that investment is, depending on your situation, of course, but it probably makes it all worthwhile. So good luck in your PR application. I hope that answers your question.
Go
ahead.
Sorry, just to add on a little bit, just for foreigners, so PR who leave the country for good for Singapore and give up their resident status can actually get back from the CPF board all their money, right? That's not applicable.
That's a great point. That it is, if it is that for whatever reason you decide to leave Singapore, it is you can cash out, and that happens all the time. We see that when someone, for whatever reason, things don't work out in Singapore and you return to the US, you can cash it out. And because you were declaring it every year on your US return, so it's after tax income, so you get it tax free. You take it and you move with it. So yeah, that's a great point. Thanks, Boon Yip, for that. Next question. This person, he or she asked to remain anonymous. So, okay, we won't call your name, of course. So your question is, if I let my child stay in a property that I own in the US and also use the property myself occasionally, how would it impact on your US taxes? You didn't, Mr. or Miss Anonymous, you didn't identify whether you are a US person or not, whether you're a US green card holder or citizen. So I'm going to assume that you are, right? So I'm going to assume that you're American and that you are based in Singapore. Now, if it is that you have a son or daughter that is studying in the US or for whatever reason living in the US, and they stay in a property you own, this is so common because, of course, the US is a destination of choice, universities for young people. Singapore wanted to study abroad, so this is completely normal. And it does happen that compared to the price of condos in Singapore, real estate in the US may be considerably cheaper, right? So you take the opportunity to invest, right? Why have your son or daughter rent when they can live somewhere that you own. So this is completely normal. There should be no US tax consequences aside from property tax or whatever. But assuming that you're American, however, depending on what state you're in, by having a property available for your use, and again, it's very state specific. So depending on what state your son or daughter is in, you need to have a conversation with a competent advisor. Because, for example, I'm just being random, like New York, popular destination. If your child is at NYU, Columbia, Cornell, by having that apartment or that co-op available for your use in New York and you're a US citizen, you may trigger tax residency in New York. Even though you're not there, maybe you just pop in for a couple of weeks a year to see how things are, to catch up with the kids. But by having that property available for your use, you may trigger state taxes. So that's a key thing to look at. Assuming that you are American in Singapore, by having that property available for your use, it may trigger a state tax liability, and the state may seek to tax you on your worldwide income. So I don't know your specific circumstances, so you can feel free to reach out to us or whoever your preferred advisor is to talk that through, because you're right, there may be implications, and it's good that you're thinking ahead like that. Next question. Do I need to stay a certain number of nights to show that it's for you? Yeah, so just even if you don't go to the US at all and you remain in Singapore as a US person, citizen or green card holder, it may lead to a tax liability at the state level. However, you didn't mention, but if it is that you are not American, you're just 100% Singaporean and you have no US green card, then it should not trigger any tax liability to you. Just owning a property and it's not income producing, so a relative, in this case the kids, are staying there, that's no problem. But if you are American, yes. So okay, Mr. or Miss Anonymous, I hope that answers your question. If not, feel free to type more in the box below, or you can just shoot us an email and we can have a consult. So moving on. Okay, I'm a US citizen working in Singapore for a Singapore company. Okay, if you're a US citizen working in Singapore for a Singapore company, what salary is subjected to US taxes? That's easy. If you are a US citizen, no matter whether you're in Seattle or Singapore, the IRS really doesn't care. You're going to be subject to taxes on your worldwide income. So that's a pretty easy question. So basically, a US citizen, tax on your worldwide income, or if you are under Section 7701, a green card holder, or you've triggered substantial presence by spending a lot of time in the US, you're subject to taxes on your worldwide income. So that is axiomatic. It is what it is. So he or she continues, housing allowances and retirement supplement salary, so are they also subject to US taxes? Yes, you're absolutely correct. You're subject to taxes on your worldwide income. It doesn't matter whether you are in Tennessee or Tanjong Pagar, the federal government is going to tax you. So that includes all your benefits. Housing, I know if you're one of the few people that are still on an expat package and you get that flight back every year, or you get a car allowance, school fees for the kids, that may all be taxable. So it's 100% taxable. You'd want to sit with an advisor to talk that through, but generally speaking, yes, 100% taxable. Hope that answers your question. Okay, next one. I'm a US citizen who's lived in Singapore for the entirety of 2021. Does that qualify me as a bona fide resident of Singapore? Does that mean that I can travel back to the US for more than 35 days in 2022 without incurring additional taxes? So, right, so just to create context, the most attractive benefit of a US person being a US person outside of the US is, of course, the foreign and income exclusion, which is under Section 911. There are two ways of qualifying for that. One will be the bona fide residence test, and other is a physical presence test. And this allows you to exclude, you still declare the money, but it won't be subject to federal taxes. It moves up with inflation each year. For 2021, I think it's like 112,000. So when you put in that 112,000 plus your standard deduction, assuming you're married, which is maybe 25,000 plus your housing, assuming that you're renting. So it could be as much as $160,000 that you report, but it won't be subject to US taxes. So this is a really important benefit. So as we mentioned, there are two ways of qualifying: the bona fide residence test and the physical presence. The physical presence is objective and quantifiable, and it's quantitative. The bona fide residence test is subjective and qualitative. So I'll start with the easy one, which is a PPT, the physical presence test. By virtue of you basically staying out of the US and not being in US airspace for more than 35 days, you qualify to exclude that income as we previously mentioned, right? So that is just a pure days test, remaining outside of the US and not being in US airspace for more than that aforementioned number of days. The bona fide residence test was one you asked specifically about. And I know why you're asking, because it is subjective and it is qualitative. You know, it's not black and white. It is a test of intent, if you will. Where's your heart? Where's your center of life? And by the questions on Form 2555, they're challenging you to demonstrate that your center of life has moved outside of the US. And you have done so for a full calendar year from Jan to December. So if it is under this circumstance that you've described, that you've been out of the US and you have been a bona fide resident of Singapore from Jan to December in 2021, then, and you've continued to do so flowing into 2022, yes, you're absolutely correct. So you're not bound by the strict quantitative provisions of the PPT, the physical presence test. So you can spend a little bit more time in the US, but we're talking about shades of gray, right? Your center of life must remain in Singapore. But to answer your question, yes. The question is, now your follow-up question is, I'm not seeing you typing, but your follow-up question might be how many days? That's a test of facts and circumstances. So you need to speak with your advisor on that. But basically, yes, you can spend more than 35 days, generally speaking, in the US without losing your foreign earned income exclusion. I hope that helps. Moving down the list of questions. Okay, mindful of the time, we have 10 minutes left. I got an EP. Okay, right. So you're on an employment pass, and Boon Yip went into the employment pass process in Singapore. So good, you're on an EP. And you're working for a Singapore employer, but can you work remotely for your Singapore employer? Absolutely. Okay. All right, great. Glad it does. So can you work remotely for your Singapore employer? Absolutely. That's up to you and your employer. You guys set your terms and what are the conditions of your work, and you can. Now you're asking if you can work from Bali. I'm smiling because we do actually have quite a few clients who do work for Singapore employers, mostly pre-COVID, but now that Indonesia is reopening, people are returning to Bali. I'm seeing stuff online, and Bali is coming to life again. So working remotely from Bali, yes, that is absolutely a possibility, and it is quite common to meet many people working for Singapore employers remotely from Bali. So the question is, what does that do to you from a tax perspective? Well, you're on an EP, so presumably you would still, as one of the conditions of your EP, generally speaking, and Boon Yip will jump in, is that you are assumed to be tax residents in Singapore, and you should still be subject to taxes in Singapore, even though you may be going back and forth or spending a lot of time in Bali. Am I correct in saying that, Boon Yip?
Yeah. Let me just explain a little bit more.
Okay.
So essentially, your income derived from Singapore. So where you work is your choice of a working place between you and your employer. So that doesn't dictate whether the location. So essentially, your income derived from Singapore. So it's taxable in Singapore. I don't know about your Bali, whether you're subject to resident tax or what, but in any case, you'll be taxed in Singapore. You have to file.
sorry, that's a great point, Boon Yip, and to take that further, yeah, and now you're moving from a situation, if it is that you do trigger tax residence in Indonesia, which is a likelihood depending, once you cross that 183 days, then you can be subject to taxes in Indonesia, which we mentioned during Boon Yip's presentation, is much higher than Singapore. Singapore tops off at 22%. Indonesia, of which Bali is a part, is 30%. And the graduated rates are, so in other words, you move up the ladder faster than you do in Singapore. So yes, it's a higher tax rate, but for each band, it's going to be higher as well. So be mindful of that. And the immigration laws are very, very strict in Indonesia. I was having a conversation with someone at the US Embassy in Jakarta, and he was telling me that they spend an unfortunate amount of time getting Americans out of trouble in Indonesia because they're working there without permission. So, and remember, it's not working for an Indonesian employee, it is working in Indonesia without permission. So you need to have a conversation with your employer and also with someone who can talk you through the intricacies of Indonesian tax. If you don't have someone, we have a colleague at Moores Rowland in Jakarta and Bali, which is Dickie. He's the head of tax for Moores Rowland. I can introduce you to him and you guys can have that conversation. So I hope that helps. All right. I'm just going through anybody else. I've seen that you've asked more questions, but I just want to give somebody else a chance to ask questions as well. So right, so I'm just having a look. Okay, so you've gone on to ask, okay, Bali, what do I think about Bali? Yeah, I mean, like most people in Singapore, I've visited Bali. It is a great place to work remotely. From a tax point of view, Indonesia is probably one of the more tax disadvantaged jurisdictions in our neighborhood, because as Boon Yip pointed out, Singapore operates on territorial tax. So you tax on your Singapore source income only as an American. So for example, if you left your rental property